That's how I've gone from 2015 to what is now 2026. It's been an 11-year business and property journey. And most people look at you and think, okay, that's happened overnight, and it's not. I took all my savings, everything that I'd generated, and I put it into this order. The money went to the wrong person and basically lost that money. Most people would have finished their whole entrepreneurial journey there. And I'm talking to you, it's 2026, and we are on track to be doing 30 a month. This is a story about resilience. This is a story how I made it into a 7-figure property trader. Everyone sees when you become successful. Everyone sees when you become a 7-figure property trader, but no one actually understands the journey that it takes to get from zero to where I got to today. And today, I thought I'll create this whole YouTube video for you guys where I can basically break it down, explain what I had to go through and all the ins and outs, the resilience that it took, the mindset that it took. So stay tuned and find out more. So, I will take you back to 2015. I was a pharmacist at the time. I studied for 4 years where I did a master's degree. I then did an extra year's worth of training. So that was a 5-year training and degree in general. And then I went out in the big world, the big corporate world, looking for a job. Got a pharmacy job, got what was at the time a very, very well paid pharmacy job. And I was a pharmacist for about 2 years. So I worked my way up the ladder pretty quickly. And I pretty much got to a position where I capped my salary. So I was earning the highest amount I could earn, or most people could earn as a pharmacist. I then became a pharmacy manager and I basically got capped out. Now, my issue with that was I got bored. I found it very repetitive and I just didn't feel like I was being challenged enough. So when I started out, it wasn't about money. It wasn't about doing anything other than just trying to challenge myself and do something different, something that I enjoyed, something that I was passionate about. So I set up a healthcare business. That was how I got into business in general. So it wasn't property that I started off with, it was business. Now, what the recurring theme that you'll find is most successful people are successful because of business. Property is just a byproduct of what they do. So they might make loads of money in business. Obviously, they want to then reinvest that money in that capital, and that's when they put their money into property. Very rarely do you find that people will start making money from property investing straight away. And this is why I wanted to take you back to my whole journey and explain what I would do differently if I could go back. So I started a healthcare business. What was the healthcare business? It was a very simple business. I went to a lot of the manufacturers in the UK who were all focused very much on the UK property market. They weren't exporting abroad. They weren't looking at any other markets apart from the UK market. And I said to them, why? Why are you not looking at exporting your products abroad? You can expand your business. You know, some of them were doing 10, 15 million pound in the UK. They could have probably at least done 100 million if they were exporting abroad, if they really put the time and effort into it. Now, what was holding them back was understanding the regulations, understanding, how to basically register the product. So there's a lot of rules and regulations, red tape, but also having trusted partners out there and also having team in the UK that can obviously help them to build that export business. So my business was very, very simple. I went to them and said, well, if I took all of that away from you and it didn't cost you any money, didn't cost you anything, how about I can try and expand your business by at least, whatever, £200,000-300,000 a year. Majority of them basically turned around and said, well, look, you've got no track record. You basically just started this company from scratch. How do we trust this process? How do we trust you? And only one of them, and it only took one to believe in the fact that I could do something for them. And it was from that one, I then took on 4 or 5 different clients. We did around about £800,000 in sales for that one client in the first year. And then other clients started to come to us saying, well, can you do the same for us? Can you do the same for us? We expanded their export markets. We brought them buyers to basically buy their products, export it abroad, distribute it abroad, and it just expanded their market. They started to make money from markets that they weren't in the first place. So I had that little bit of success from that business. But before that happened, the one biggest thing that I learned and the one biggest mistake that I made was I had a customer that basically wanted to order some products from an American company. This was my first transaction in business. And the customer said, look, if you can please just, transfer the money get the order done, and I will then transfer the money over to you. And this is the naivety of people going into business, don't have any experience. I went into it with no experience at all. I took all my savings, everything that I'd generated over at university. So I did lots of different jobs at university, and I took all my savings that I generated from there and I put it into this order. And this order was basically more than 10 figures. It was multiple 10 figures. That money then went to the company. What I hadn't realized at the time was my emails had been incepted at the time. And when I sent the money over to this company or supposed company, basically it was not the actual company that was emailing me with their bank details. It was the hackers, right? Or the scammers, whatever you want to call it. Money went to the wrong person and basically lost that money. And this is a story about resilience, because ultimately most people would have finished their whole entrepreneurial journey there, right? When you have family telling you not to do it, when you have everyone being negative around you, you shouldn't leave your well-paid job, something that you studied at university in order for you to do, in order to get to something that is very, what they consider risky, and the whole world is being negative. And then you have this one big thing that happens and all your money's gone, and all of a sudden it's just difficult. It's very negative. So it took me a while to get out of that mindset, have the abundance mindset that something else is going to come. And then eventually, through this is where persistence and resilience comes in. You just keep doing what you're doing. You keep trying to find, distributors, keep trying to find buyers. Basically, you just continue doing the business that you're doing. And then eventually we had one order that came in that basically not only brought back all of that money that we had lost, but also made us a profit as well. And that was the start of thinking, this is basically going to go all wrong. This is all negative. To actually, even when things go wrong, even at the start of the business, if you hang in there and you don't quit, you don't give up, things will come good. Business is not about trying to come up with some amazing idea, something that is going to be revolutionary. Business is about doing something that is basically going to feed a lot of the people that need that service, that product, but also doing it consistently enough that you're in it. And when you do it consistently enough and you're in business for long enough, opportunities will come your way. You just need to make sure that you have that resilience mindset. You never stop, you never fail. And you only fail when you stop. So that's what we did. We made the money from the healthcare business. I then decided, okay, well, I can see this healthcare business going one or two ways. What was happening at the time was everyone was creating what we call now white label products. So everyone was making their own products in their own brand name. So Joe Bloggs would go to a manufacturer and say, can you make Joe Bloggs Vitamins Limited? Can you make this brand? Can you make that brand? And what it did was it diluted the market. So it meant that a lot of people had a lot more options, but also I could see the cost of these products were going up, right? So the margin was starting to really start to decrease. So over the next 5 years, I thought really this business is going to start to get more difficult, tighter margins, etc. And I thought, okay, let me make a move now. And my move was very simple. My move was very much, let me buy one property, let me try and figure out something that looks good value. So I didn't go for massive discount or anything like that. I didn't go to a source. So all I did was I went to an estate agent. This was back in Manchester when Salford Quays is not what Salford Quays is now. It was when it was just starting to get developed out in 2015. And I looked at all these nice, new, shiny new builds and I thought, okay, that's all going up. All of that is basically being done off plan. It's obviously going to be at pretty high, prices per square foot, prices per square meter. Why is no one else looking at this stuff that was built in 2007, so 2007, which was about 8 years before that? It was now second-hand, it was now boring, it was now not as exciting and shiny as what was going up. And I saw a flat for £110,000 and I thought, okay, this is not a bad investment. 110,000, I could probably rent it for 600, 650. So at the time, for me, that was a pretty decent yield. I didn't go to a broker, I just went straight to, I think it was NatWest. They were the only people that were doing buy-to-let mortgages for people that didn't own their own home at the time. And I bought this flat. Then they came back to me and said, I'm so sorry, we've had someone that's come in and basically I got gazumped with a much higher offer and they're going to have to, the vendors just agreed to go with that. They didn't even come back to me and say, can you increase? They just said the vendor's going to go with that. So I was kind of like, okay, we're back to square one now. What do I do? And again, it's a story of resilience, right? So I I was still looking in the market. After a couple of weeks, I got a call from the exact same agent, and they said, look, there is someone that's moving back to Asia, owns a flat in the same block. However, all she needs is £94,000 to basically clear off her mortgage. All she wants to do is clear off her mortgage, clear off a bit of fees, and going back to Asia. Same property, pretty much, same layout, same size, in the same block, similar condition. So I thought, great, here's an opportunity. The same property that I was trying to bid at 110,000, I can now get for 94. It's exactly what I was kind of looking for. And we went ahead and we bought it. That same property in 2018 was refinanced at £150,000. And that, again, just goes to show you, timing in the market is better than trying to time the market. So being in the market long enough is better than trying to basically say, well, I'm waiting for the market to come down, I'm waiting for the market to do different things. We can't ever time the market. Just buy a property and wait, get into business and wait, do what you need to do without having to wait for anything specific. But if you're waiting for that specific thing to happen before you start it, that's where people end up losing out. That's where people end up missing a lot of opportunities. So that was 2015. So 2015 was when I bought my first property and when the healthcare business was set up. Fast forward 2016, didn't buy any more properties, was focused on the healthcare business, made some more money from that. Come 2017, I'm now ready to buy my next property. I've seen the mechanics of property. I understand how solicitors work, how estate agents work, how mortgages work. So I've understood what we call basically the mechanics of it, okay? Now, at this point, I had no education. The only thing I had done was read a Rich Dad, Poor Dad book and understand the mentality of, okay, well, we want to accumulate assets, right? We don't want bad debt. Good debt is good, but also what we really want to do is accumulate and stack assets. That's what we want to try and achieve. So 2017 came, and I remember this moment really, really well. I went to a local estate agent in Lincoln, so I was living in Lincoln at the time, and they had just launched a building that had these studio pods for students, effectively, okay? So it's little student pods that we call them. No more than 9 or 10 square meter little studio pods. And they were going really cheap, something like £45,000, £50,000. So I went to the estate agents and she turned around to me at the time and said, Saif, why are you buying this? Why is this of interest to you? And I said, well, it just looks cheap and it's a good yield. And she said, yeah, no, I understand that. But she said, it's going to be difficult to resell. Bearing in mind, this is the estate agent that's actually selling the property. It's going to be difficult to resell. You're going to have service charge. She said, and this is why, as an estate agent, she didn't push her own product at the time. It turned out that their director had just taken possession of a repossessed HMO portfolio within the city. And they had brought those HMOs onto their books and they were trying to sell them. So luckily for me, and obviously good for them, she diverted my attention from this studio flat into this 4-bed HMO that was going to generate £20,000 that I could pick up for about £120,000, £130,000. Great, on paper, looked really, really good. And that's what I did. So it was a rundown HMO and needed some work, so I ended up buying it for £120,000 at the time. It was generating £20,000 gross. The net was circa £11,000, £12,000, so still a very good net. I spent probably about £15,000 at the time just doing some light touch renovations to it, and we rented it out. So that's gone from 2015 for my first property, 2017 to my second property. I then went and bought another 2 HMOs within the same area, also student, also part of the repossessed portfolio. But at this stage, I felt like the prices were getting higher and higher because obviously they had sold quite a lot of them, didn't have loads left, so they obviously tried to increase the pricing, and it was just getting more and more difficult. Now, what happened in 2017 was we had Article 4 being introduced into Lincoln at the time. So we were buying all these HMOs, we were getting a certificate of lawfulness, which is basically something called a C4 certificate, effectively saying that this was used as a HMO previously. Article 4, which prevents people from taking a normal house and making it into HMO, came in at the time, and it basically said, because it was used as a HMO previously, we can continue to use it as a HMO. Something called grandfather rights. So we did that. And then Article 4 came in, and I thought, okay, well, what next? What do I do now? Okay. I was looking for properties in the area that had any signs that it was being used as HMO previously, okay? And I bought one or two properties. One of the properties I bought on the same street, you can buy them for 100, 110,000. I was buying them for 100, 110. I was getting this certificate of lawfulness because I was proving that 4 people or whatever, however many people were living in it previously, and that was the last use case. Getting the certificate of lawfulness, that one certificate was increasing the price by at least 60,000. So that property was then worth 170, and I was basically getting tenants in, 4 tenants, flipping it on. Very simple strategy in terms of what I was trying to achieve, but it was very much okay, how can I make money from buying and selling, right? Finding these opportunities, arbitrage I call it, as we talk about in property trading world. So fast forward from 2017, I bought 3. It got a lot more difficult, so I only ended up buying another 2 early 2018 and basically flipped them on as HMOs. And then one of the estate agents said, Saif, in the nicest way possible, you're becoming a motivated buyer. You're calling us every single week, you're trying to get HMOs, but you're also not realizing, because it's Article 4, there's very, very limited supply of them right now. I would recommend you going to another area that doesn't have Article 4, where you're not having to pay these silly, stupid prices for stuff. Took it into consideration, and actually he was right. And we ended up moving to Doncaster at the time, no Article 4, bought another 8 properties in 2018, and basically converting them all to HMOs. By 2019, we owned basically 14 properties in total. A lot of them were HMOs. A lot of them were very capital intensive. As you know, when you're buying these big rundown houses and spending loads of money renovating them, putting all the capital into them, and then trying to obviously wait for, staging, furniture, then trying to cash flow them, it just takes a lot of time and effort. And we got to a point where we had 0 in our account, and I mean literally 0 in our account. So the typical asset rich, cash poor, right? And I thought, no, we need to change. The strategy's not working at all. So I decided, get the HMOs rented out as quickly as possible, and rather than refinancing them, let's start selling them. They were generating a great income, they'd just been renovated, they were ideal from a sales perspective. People were trying to buy them. And for a lot of people, they had a pretty good yield on them, At that time, a lot of people we were selling them at 12, 13% net yields. So probably more like 17, 18% gross at the time. We were picking them up really cheap, and it was before Article 4 had kicked in. So we did that in 2019. We then decided, okay, let's go back to basics. If we're going to build the portfolio further, we're going to go back to single lets or blocks of flats. That's kind of what our focus was. And we did. So 2019, we probably bought another 29 properties that year, very much using what we call the BRR method in these days, bridging finance on the way in, trying to basically get a deal where you could obviously renovate the property, add value, but also buy it really well. And we were buying from all sorts of traders, cash buying companies at the time, auction houses. And come 2020, we'd built the portfolio. We were circa 68 properties in 2020 by that time. But we had all of these properties we just went through that acquisition phase of that we had to refinance at the time.
Hi, Michael Allison here from Roma Finance, proud sponsors of Property Auction Hunters. These guys are great to get you ready to go out there and buy an auction. And Roma Finance, with our product set, we're there ready to support you with the finance that you need.
And if any of you guys do BRR, you know how intense it is. We're having to do all the renovations. So it comes in waves, right? Lots of operations in terms of buying and then renovating and then refinancing and tenanted. And all of that takes a lot of time, effort, and mind space. So we went through that wave. Come 2020, the Boris bounce back happened. And effectively, we were priced out the market. Everyone was not trading to us anymore. Everyone was buying in themselves. The market was doing really well. They were trying to sell it themselves. They weren't needing to sell it to us, right, at trade price. Then COVID hit. And when COVID hit, everything changed. So what happened was the market shut down. There was no liquidity in the market. No one was buying, no one was selling. I remember this so clearly where when we were making, even looking back, we were making pretty high offers pre-COVID. 2 or 3 days after COVID, I was getting calls from the estate agents. Are you still interested in that property at that price? The buyers have all pulled out. All of the London buyers have pulled out. All of the big equity players have pulled out. And we continued buying. It's as simple as that. Now, what happened was we ended up setting up our own cash buying business at that point, Property Buyers Today. And we thought, well, if these people aren't selling to us because it's obviously a really good market from their perspective, we need to take control of the process. So we need to make sure we can obviously generate our own leads, get our own properties that we buy, and have full control over that process. And that's when we set up Property Buyers Today. That's when we officially started trading in 2020. And I'd say from 2020, we probably started to trade 3 a month. 2021, we slightly increased that to about 5 a month. 2022, we really went for it at that point. We went to about 10 to 12 a month in 2022. And from 2023 to 2025, we did circa 20 a month. And I'm talking to you, it's 2026, and we are on track to be doing 30 a month in 2026. So did we have ups and downs? Absolutely. Did we have times where we could have given up? Did we have times where I could have said, do you know what, this isn't working? Absolutely. But what did I do? I pivoted. So what I didn't do was I didn't change my business model. I didn't do something where I went, right, I want to get out of property, I want to do something totally different. I went into a systematic approach. Healthcare business, I saw that wasn't going very far, but it was making cash and it was obviously doing well. Took that money out, put it into something that's more sustainable for the long term, which is property. Started the property investment journey, then went from property investment to property trading. And now our full focus is very much on the property trading side of things. We still have the portfolio. We still obviously maintain that as well. We've trimmed down parts of it so we can obviously maintain a pretty good, solid portfolio. But that's the story. That's how I've gone from 2015 to what is now 2026. It's been an 11-year business and property journey. And most people look at you and think, okay, that's happened overnight, and it's not. The first 4 to 5 years were hard work. It was late nights. It was early mornings. It was even me getting into the mindset of, and it sounds crazy now saying it, the first day I was working from home, starting the business, where I basically didn't have a job and effectively started the business, I was wearing a shirt, a suit, because you were getting into the mindset. Even though you're at home and it sounds stupid, if you're sat in your pajamas working from home, you don't have the same mindset that when you're sat working in your work clothes, you've freshened up, you've had a shower, you've had your coffee, and it just sets you up in a much, much different approach. And, you know, those first 5 years, I'd even say, I had an old Mercedes C200, never got a new car at that time, lived with family, so didn't need to pay rent, just lived below the means basically, didn't do much traveling, just very much head down focused, didn't really even have much of a social life. And if I look back, those were the hardest 5 years of my life. Very, very difficult. Something that, you know, if I could look back, would I do again? Yes, I would, but it's not going to be enjoyable to do. But that's the difference. The difference is people don't want to do the unenjoyable things to get to the point where you can do the enjoyable things. And yes, now I can run a successful, you know, 7-figure property trading business. Yes, I can travel. Yes, I can do things that I want to do. I've bought back my time, so I've got time freedom and also have financial freedom, I suppose, in a way. But really it comes back down to, well, what does that actually mean? What do you actually want to do? I'm not the type of person that ever wants to retire. I work every single day until I die. That's probably going to be the reality of my life. And I think as far as I'm concerned, I enjoy what I do. So I'm not the type of person that just wants to basically get to a point and then stop working. I could have. You can retire. And most people that want to retire do retire and then end up coming back and saying, it gets boring. So, you know, we enjoy business, we enjoy the challenges. And for me, that's very much it. I love challenges. I love leading people. I love supporting people. And I love trying to come to a common goal where we can basically say, right, this is what we want to achieve as a company, as a team. This is how we're going to achieve it. And to go out as a team in order to basically try and achieve that. So I want to end this on the fact that if you are at the beginning of your journey, you might have not even started a business yet. You might still be in employment, or you might be in your business and you're thinking, this is not working, this is not going the way I want, or you might actually be quite successful at business. Whichever part of your entrepreneurial journey you're at, this is something that I wanted to try and do to try and inspire you to say, if you are doing it and you're having problems, keep going. If you are thinking about starting but you've been procrastinating, start and figure it out later. And if you are doing very, very well and you're going to the next level, congratulations, well done, keep going. You need to make sure that you are doing what you enjoy. And also, if making money is a byproduct of that, then that's great. But the main aim is doing what you enjoy, doing what you're passionate about. And if this is something that you are interested in, if this is something that you think, okay, well, I want to get more involved, especially in the property trading side of things, then we do run the Property Trading Academy. It is a 12-week online course where you will have the nuts and bolts of everything to do with property trading, anything that you need to understand, all the creative strategies, finance, my whole blueprint of how I've set up, started and scaled my property trading business is in there. And if you think, okay, I've done that now, I've got the knowledge, I've got the base foundation, and I want to take it to the next level, we also run a mastermind. And that mastermind means that if you are bringing those deals in, you have access to good quality deals, especially if you can get them off market through auction, etc., and you think, okay, I don't have the money to do this, we will joint venture with you. We will put our money where our mouth is and put our money into the deal. As long as you bring the deal to us, we put the money in, we work together, we obviously create a common goal and create a community where it's all people trying to achieve the same common goal, making money, trading property. And if you think that's not enough, this year, 2026, we are running a property trading retreat as well, and it's going to be somewhere special. I'll drop all the links and all the information in down below. I look forward to seeing you guys all there.